The pressure to preserve cash, that seems to be top of mind. You saw profits drop 82% in the first half of the year. What measures are you taking to cut costs given the environment you're operating in right now?
Yeah, I mean, the first half of the year was the most challenging the travel and tourism industry has ever seen, when you saw social distancing come into play, travel restrictions and borders closing. So our revenues fell 52% and profits declined. We were able to turn a $74 million profit and protect our $2 billion in liquidity by really focusing on preserving cash and looking at how we could control our discretionary expenses across the entire business, looking at our labor costs and so forth, working with our banks, and then, of course, at the same time, implementing across the world new operating procedures to protect the safety and well-being of our guests and colleagues. And I'm incredibly proud of the team, how we got through what was the toughest half in this industry's history and came out pretty well.
You have a unique lens into the world of travel, Keith, a diverse portfolio of brands from the upper scale intercontinental senses and then lower budget hotel chains like Holiday Inn, which actually consistently outperformed over the past 3 months in terms of occupancy levels when you compare to what you're seeing with some of your luxury brands. What's behind the growth in Holiday Inn? Can it last?
Yeah, we saw some really strong performance in Holiday Inn Express as markets began to reopen, particularly in the United States. We saw a lot of leisure travel, but also some non-discretionary business travel come back. And so month by month, we saw occupancy continue to increase in the U.S. and around the world. And that's really related to three things in general: the curve of where the virus is in terms of containment, overall government restrictions on travel and on social gathering, and consumer confidence, both in the economic situation and also in the safety and well-being of the travel experience too. And so we expect to see continued momentum and recovery, but it will be patchy because, as you've seen recently, markets open, markets close, countries open borders and then close borders. And those things will, again, when they open, will aid the recovery. But when borders close or restrictions come into place, that will slow the recovery.
I'm just looking at your pipeline. You added 4,000 rooms in the last 3 months, but mostly in your upper scale luxury segments, so Intercontinental, Six Senses. If the growth is in the lower budget sort of segment, why build more hotels in luxury?
It's been an interesting half, right? We opened 90 hotels and signed 181 hotels around the world across the brand portfolio. 100 of those was in the Holiday Inn, Holiday Express brand family, but also luxury hotels like Six Senses. And we saw those resorts actually perform well. And it's been a fascinating opening up after the lockdown, because you have seen the mainstream hotels like Holiday Inn Express do well, but resorts where people can get to easily and can socially distance have done very, very well also. And in China, where things are probably closer to being back to normal, we're having some record performance in our resorts at the beaches, in the mountains, and by lakes. And so you will see continued growth at the top end and also into the mainstream segments.
Keith, are there areas where we should not expect to see growth, or even perhaps expect to see your footprint shrinking? I mean, I know interest rates are low. I'm not sure what your capital strategy is, but I imagine in some areas with low occupancy, it can be pretty painful to hold on to these properties for an extremely long period of time.
You know, we made a decision years ago and led the industry into an asset-light strategy. So while we have nearly 6,000 hotels around the world, we actually own or lease a handful, 25 or so. And so we have a very, very light capital structure, enables us to help owners grow their businesses around the world. And we expect to see that growth continue. And again, we had 47 hotels break ground in the last 3 months around the world. And so even in the depths of this pandemic, owners are investing in properties, both at the luxury end and mainstream, and opening hotels. And we expect that to continue. However, we do think that there will be more of a flight to quality, and we will see hotels that want to convert to some of the biggest branded players in the world will begin changing flags as time goes on, and we will benefit from that. We recently did a luxury hotel, 2 luxury hotels in Shanghai, and a new Intercontinental in Rome, which is a conversion. So we're going to see more of that take place as time goes on.